Happy Independence Day. It is July 4th. I hope you're having an amazing day. I do want to remind you that the series premiere, episode 1 of Buying Vegas, is live. Also want to remind you, unlike most days, we will have no additional videos posting today. Vegas, episode 1. We have 3 more that are ready to go, working on 5 and 6 as we speak. So, of Buying Vegas, hopefully you get the understanding of what we are trying to create, give you a little bit of inside view into our life, our friends, things of that nature. So I hope you enjoy the initial episode, and do me a favor, send some love to Olivia. She's obviously on camera for the very first time, so she is a little nervous. So again, folks, let's keep it rolling. July 4th, we got a lot of stuff to talk about. I want to start off with a brand new call. I premiered this call yesterday on Twitter or X. I thought with you, and I do this so you can hold me accountable. I now believe that we will, the recession will have either started in June last month or start this month in July. Why do I say that? Well, in the last 48 hours, maybe 72 hours, you have heard me talk to more and more people in the real estate business about the environment slowing down. Again, as an economist, somebody who studies the consumer for 30 years, I believe, unlike every other election that I have been through, this election is different. And of course, I am talking about the presidential election. I believe what is going to happen between now and November 5th, I think that's election day, is the consumer is going to pull back. Some consumers are scared. Some consumers are frankly pissed off. Many consumers are confused. And when you are in that state as a consumer, you pull back. So where might we see these numbers if I am correct? I think you're going to see them most prevalent in the big purchases. So it is my expectation that as we roll through the next several months, existing home sales will disappoint. New home sales will disappoint. Car sales will disappoint. Basically, the consumer as I know them and as I have studied is someone who doesn't sign up for big purchases, big expenses. It is something that we definitely pull back on. It is the discretionary consumer. And again, something else you and I have talked about for the last 6 months or so is the bifurcated consumer, right? I don't remember what the percentages are, but let's say the top 20% consume 50% of what is going on in the economy. And it is that consumer who is pissed off, afraid, confused, whatever the emotions are. And they are going to pull back. Now, they won't pull back in every way. They'll still go out and, have dinner, and they'll still do experiences. But I do believe we are going to see a dramatic pullback in stuff, and specifically big purchases like homes and cars. So it is going to be very, very interesting going forward. Again, I want to give myself 2 months because this whole calling recession is kind of fuzzy math sometimes. So I'm saying in something like 9 to 10 months, they will declare that the recession started either June 2024 or July 2024. That is my newest prediction that I hope you hold me accountable to. A couple of other things that we need to talk about is in my opinion, I believe the Democratic Party will have a change at the top of the ticket sometime in the next 5 to 7 days, if not sooner. I think it certainly seems like the money and the support is dwindling for President Biden. I know there's a lot of people going in front of cameras, but hopefully you and I have learned by now what they say in public is not what they're saying in private. So I expect a change at the top of the ticket. Who knows what happens after that? Again, back to my feeling that this next 5 months, again, until November 5th is going to be just, we're going to wait. Like, everybody's going to hold their breath, in my opinion. Which, again, remember, if you are like me and you are a contrarian, what do? You write disrespectful offers. You do great deals. You and I, job is to see, right? We're not going to zero transactions. There will still be some people that have to sell. And that is our job, to go create great deals. We got an important number yesterday, ISM Services, right? When ISM, there's a manufacturing and a service component. The manufacturing component of our economy has been below 50, aka contraction, for several months. It's often been said, don't worry about manufacturing. We're a service-based economy. We got a nasty reading yesterday. Again, in this particular survey, below 50 bad, above 50 good. Contraction, growth. It is that simple. Last month was 53.8, or the previous month. Expectation was 52.7. So again, the expectation was the service sector would continue moving forward. Again, remember, 50 is the threshold. Boom, 48.8. Contraction. The service part of our economy is contracting. In fact, the 48.8 is the lowest reading in 4 years. That kind of number, folks, will get the Fed's attention, right? We are roughly 68, 70% service-based economy. If the service-based economy goes into contraction, you can guarantee a recession. It really does seem like the economy is slowing down, hence my call of either June or July for the official start. I don't know if you've seen it, but GDP Now, you can go to that website. I go to it about once a week. GDP Now was forecasting roughly 4% GDP growth 5 or 6 weeks ago. It is now 1.5. As of Monday, it was 1.7. So as more and more negative data comes through, they update the model. The model seems to be going one direction. Let's talk about the Fed minutes. The Fed minutes came out yesterday at 2 o'clock Eastern. At least I think it was 2 o'clock Eastern. The Fed minutes, again, what is it? It's essentially a running review or historical review of what was talked about at the Fed meeting 6 weeks ago. So I pulled out a couple of things that I thought were interesting. One, there's a lot of talk about different parts of the country slowing down, regional slowdown. There was a general feeling that pricing pressure was diminishing, aka inflation. Definitely a preference to wait and see, right? Get more validation. There was definitely talk about the policy being restrictive. That's an important one. Again, as the Fed kind of declares victory, they don't want to have a restrictive policy. They want to kind of try to find this R star, which again is just fancy talk for neutral. So again, the policy stance is restrictive, aka cuts are coming. There's been a slower progress on inflation than expected, certainly in the first half. JP Morgan, after reading the Fed minutes, said that the minutes leaned heavily dovish, which I found interesting. And then the last thing I noted was there was definitely a fear that the job market can weaken faster than expected. Don't know if you've seen this gentleman, but Ian Shepherdson, chief economist at Pantheon Macroeconomics. He has a pretty negative view on the economy. He is definitely seeing some pain ahead, so that he expects the Fed to cut by 1.25% this year. Dude, we're in July. It's July 4th. He expects 5 rate cuts, 5 quarter-point rate cuts. Those could come in chunks, a half, a quarter, whatever you want. But again, Ian Shepherdson said, buckle up, folks. The second half of the year is going to be dicey. Again, as for the smart money, right, Fed watch tools, right now that is calling for a rate cut in September and another one in December. So 2 cuts or 50 basis points. I, of course, am still splitting the difference with 1 cut in November, but it will be 50 basis points. Don't know if you saw this, but it looks like Bitcoin is taking it on the teeth today. I think it's 58,000. It is broken through 60,000. So it's talk about tomorrow's jobs number. Again, we got JOLTS report Tuesday, ADP report Wednesday. Both were neutral to weaker than expected, but tomorrow's the cherry on top. Jobs number last month was 272, expected 200. I will remind you that the last 2 jobs reports were kind of dirty. A lot of birth, death adjustments, part-time, full-time. So we are definitely going to get into the weeds, but those are the expectations as we sit today. Folks, I don't know if you are in the school community, but I just learned that our Wednesday accountability group, led by Frank, old guy REI, went for 3 hours and 47 minutes. 3 hours, 47-minute accountability group, 1 time a week, every Wednesday, I think at 6 p.m. Pacific. 3 hours and 47 minutes. There was apparently 2 Florida investors meeting each other for the first time, 2 Houston investors. Somebody talked about being in the first 5 years of suck. Folks, if you want to be a real estate investor, other real estate investors, one of the big things I'm trying to do with the school community is be that platform. Get other like-minded individuals that are going in the same direction, in the same place, so you can meet more and more people. We are today about 175 strong. It is my hope that we are over 200 very soon, ultimately running to 1,000. When one rental at a time is over 200, these networking and these, accountability groups become even more and more valuable. On top of that, we got Millennial Mike. I think it's in a couple of days to talk out-of-state investing. So we are bringing you more and more folks, not to mention Henry Washington, Lance Lambert next week. So there you go. Again, Frank, if you watch this, thanks. 3 hours and 47-minute accountability group. You are a legend. Don't know if you guys saw this, but looks like California is at it again. California's AB, Assembly Bill 968, targets. Yes, folks, if you are a residential home flipper, 1 to 4 units, you are now under a new set of rules. If you flip a home in less than 18 months, you better keep copious records. Any repair over $500, all permits, contractor name, phone numbers, contact information. Disclose is basically what I see. What I wonder is what happens next. Right? It is not lost on me that some people flip homes and they use unlicensed resources. No doubt. I'm sure it happens all the time on nearly every project. So now you're going to have to go get permits and license folks, which means increased cost. Does that mean the end product is more expensive? Does that mean you have to buy distress better? Does the timeline get longer? I just wonder what is going to happen. I think at the end of the day, what happens, I think 2 things. 1, in California, I believe what happens is what I call wholesale becomes a lot more common. You've heard Jason Pritchard talk about this for 4 months, where you buy a distressed asset, you simply clean it out, and then you relist it on the market. I think that is going to become very, very common. Also, I think a lot of folks will decide not to take on large projects. So I think that is happening as well. So again, it's going to be very interesting to see what happens to California distressed properties. It is going to be very interesting to look at. Lastly, I want to remind you of an important call yesterday, our video with Matt, the mortgage guy. Matt, the mortgage guy, is the real deal. He let all of us know that lenders are pulling back. Yes, folks, if you are in the process of buying a home, buying a rental, refi, you are likely going to see more conditions. Fannie and Freddie are kicking back more loans to originators that have to hold them on their books or sell at a discount. So they are getting ahead of the game and really tightening the screws on their file. So again, folks, remember, plan more time, right? I think your closings will be extended. So Last thing to talk about, folks, remember, we are halfway through the year. It is July 4th. July 4th is my favorite holiday. It is a time to remember independence. One rental at a time is obviously about financial independence. It is my hope that you can really see what is possible. It takes time. The first 5 years suck, but it's worth it. It's worth it. Last thing I'll say here before we do some congratulations is in the next 6 months, it will be 2025. You will either have 6 months of excuses or 6 months of progress. Do you want 6 months of excuses or 6 months of progress? If you want progress, One Rental at a Time School Group is the place to be. Network, get to know people, ask questions, free education, weekly calls. It is what I'm trying to do. It's something I'm passionate about because I want you to start your journey. I want you to take the next step to your independence. Alrighty, folks, we got some people to congratulate. Nothing more fun than closing one of these calls and congratulating folks. Mike, congratulations on getting your next deal. Folks, you can get as many of these black cards as you like. However, you can only ever get one gold card or golden ticket. Dustin, congratulations for getting your golden ticket. Mike, Dustin, congratulations. Folks, do me a favor. If you haven't checked out Buying Vegas, check it out. Let Olivia and I and Ty and Jody and let us know if we're onto something. We're trying to make buy and hold sexy. It's not easy. It's not fun, but we'll give it a shot. Take care. Later. Bye.